Today we're going to start on day 3, and as usual, the vision statement of what we're doing and why we're doing this is to simply equip people to create kingdom wealth. Okay, and so today is day 3, and I just want to welcome you. Thank you for everybody who's been here for the last 3 days. I know a lot of people are still signing up and joining, so I'm so glad to see everybody do this. Okay, I'm from the feedback I know that a lot of people are getting helped and blessed by this. So I'm also grateful to God and to everybody who's listening in. Okay, so today, and as usual, 30 minutes, we will have the session for 30 minutes, but we will continue on until the Zoom session automatically closes. When it automatically closes in 40 minutes, please note that that's the end. Okay, so until then, keep asking questions. We answer as much as we can. So today, I'm going to talk about counting the cost. Okay, and now, counting the cost. Get into money, you have to count. Okay, so there's a lot of numbers involved in the Bible. You can see that. Okay, and so two verses that come to me when it talks about counting the cost. Actually, four verses. I'll show the other two next. Luke 14:28. For which of you desiring to build a tower does not first sit down and count the cost, whether he has enough to complete it? And Proverbs 22:3 says, the prudent see danger and hides himself, but the simple go on and suffer for it. Okay, this has something to do with what we're going to talk about today in terms of investment. Okay, Proverbs 21:20, precious treasure and oil are in a wise man's dwelling, but a foolish man devours it. And Luke 16:11, if you have been unfaithful in unrighteous wealth, which is what we have in this world, who will entrust to you the true riches of heaven? All right. So what happens when we do not count the cost first before we venture into anything? We might start a war that we cannot win. We might start a building we cannot finish. We might make an investment which we cannot profit from. Okay, so it's always important to do research, to analyze and to check things and get advice before you start anything. All right, that is very important. Now, so what do we do? What do we do? I think the answer to that is stop the loss. What happens if you get into something and the investment or the battle or the building, you realize that you're not able to complete it or there's an issue, you stop the loss. And the in Luke 14, you read these verses. Luke 14:31 says that the king who decided to go to war because he didn't sit down first and deliberate whether he's able to meet with 10,000, meet against the guy with the 20,000 people. Once he realizes that, what he does, he asks for terms of peace. There, he is counting the cost and he's trying to minimize his loss, and so he will send in for terms of peace. Now, how does this translate into investments? Well, this is especially important in a volatile market. And so, how do we count the cost when it comes to investments? Simply by doing a stop loss. Okay, so we talked about stop losses yesterday, right? We did talk about stop losses. By the way, if you have any questions, please do keep them coming. We talked about stop losses yesterday, and one of the things people asked me was, how do you decide where to put the stop loss? Do you put it up? Do you put it below? How does it work? So, like I said yesterday, you usually, if you buy a share, you put the stop loss below the support level. And if you sell a share, now selling is also called technically short selling or shorting, where I don't have the share in hand and I'm selling it without having it in my hand. So that's short selling. When I see that the stock is going to go down, I decide, hey, I want to sell this share. So that's short selling. In that case, I had to put a stop loss to buy back the share above the resistance level. Now, let me explain this using charts, make it easier for you. Okay. Now, first of all, what is a stop loss? A stop loss is an order placed with the broker to buy or sell when the stock reaches a certain price. Stop loss is designed to limit an investor's loss on a security position. Okay, these are all definitions from Investopedia. None of my words. I just copy pasted it. Okay, setting a stop loss order for 10% below the price at which you bought the stock will limit your loss to 10%. If you don't have a stop loss and you're making a loss, it could go beyond your measure. You might lose 20, 30%, 40%. Okay, that can happen. So it is always important to have a stop loss. Now, let's look at this chart. This is Cipla. Okay, I think this share might have a bit of an upward trend today, and so we're just going to look at this share. All right. By the way, the markets have started in the red, just so you know. So we're going to look at the share Cipla. Okay, this is the chart from TradingView, the website that I used to look for charts and analysis. And now you can see no share. Let me answer that. So Renju has put up a question. So let me answer that. A stop loss is not just critical for your intraday positions. It's also critical for your holdings. All right. You always have to keep a stop. No matter what, it is important that you keep a stop loss because even your holdings could go down one day. And for example, the day before the pandemic crash, if you had Reliance and it was at a very high price and you didn't have a stop loss. So every day when you get in, I would suggest, your holdings, put a stop loss. So for example, when I bought a share called HEG, I bought it at 465 and it was reaching 500 plus. So every day morning, I would check the market and see what the share is looking like. I would also put a stop loss at about 490. So in case the market crashed and that share crashed really bad, it won't go all the way to 465. I will sell out at 490 automatically because I've already put in a stop loss order and I would get 25 rupees per share of profit. So it's not just for intraday, it is also for your holdings. Most established traders do this. They put stop losses. All right, so look at this chart. Now you'll see that the share price doesn't go in a straight line up or down. It goes in squiggles. Okay, zigzag, 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 up and down. But there is a rhyme and rhythm to this. Okay, and so we're going to look at this and understand how this works. So let's look at this. Now, this line is the 50-day exponential moving average, or EMA. And this is basically the average of the prices of this share for the last 50 days in an exponential format. Now, the red line is the 200-day EMA, which is, like I said, the average for 200. Yes, so Ria, you asked a question about long-term. What I'm referring to holdings are the long-term investments. Most traders, if they see that the market is going against their holdings, they will put up a stop loss. So for HEG, if I really like HEG, I think it's a very good stock and I'm holding it and I see that it's going to become an issue, so I will sometimes short sell the stock for that day. Like at 503, I would sell it. I've done that. I've sold it at 503 and I bought it back at 495. So I made money when the share went back down. Today it's at about 508. So it depends. You have to do this, you have to keep an eye on it. All right, so let's get back to this. So 200-day EMA is basically the average price of the price of the share for the last 200 days in an exponential format. Now you can see how the share is moving between or above these two curves. Can you see that? The squiggles tend to go up and down between them or above. So now when the share is between them, the line above becomes a level of resistance. So you can see here, this share, when it hit, came back, went up, hit the resistance, came down, went up, it came down, and again, resistance, it's hitting the resistance, coming down. So, and the same way, the support, see, you can see the support, it came down, it caught the support, it went back up, again, it came down, caught the support, went back up, and you can see over here, twice it hit the support, went back up, and then finally, it couldn't sustain anymore. This is when the markets crashed and it went down. So this is not it's not a guessing game. It's something that's mathematical. Okay, wherever there is an EMA, and because a lot of traders and investors look at this, they would naturally come in at the level of support. They will naturally sell off at the level of resistance. So looking at the EMA, I can decide when to enter and when to exit a share. Correct. Now, there's also the MACD. I've just expanded this a bit. You can see there's a blue line and a red line, right? The blue line is basically the MACD line, and the red line is the signal line. So what this indicates is simply that when the blue line goes above the red line, it's a buy signal. It's a good time to buy the share. When the red line or the blue line goes below the red line, as you can see here, it is indicating that the share price is going to drop. So you can see how it corresponds. The blue line goes below and then the share starts dropping. The blue line goes above and the share starts rising. And so this is this is applicable for long term as well as for intraday or for swing trading. For all of these, I use these charts, and most traders use these charts. We try not to make a guess. It's basically looking at market trends here. Okay, for each stock, you can look at market trends for the market itself, but this is also for each stock. All right, so Tom had a question. Apart from breaching the resistance or support, is there a situation that triggers the breach? Yes, bad news can cause the stock to just break through the level of support and go down really fast. That's what happened during the pandemic. Every level of support just went out of the window and every stock went crashing down. Okay. Good news can trigger a breaking through the resistance very hard. It can just zoom up, just cut it and go very quickly. So that those things can happen. Now, where would I put my stop loss? Okay, so if I'm buying a share, I expect the share price to go up, right? Otherwise, I wouldn't be buying a share. It doesn't make any sense. So I would put the stop loss below this support price. I want the share to go up, but in case there is a loss, I want to minimize the loss by putting the stop loss below the share price. So if I'm buying a share, I expect the share price to go up. I need to place a stop loss below the support level. So let's see how this looks in a chart. Okay, so imagine I buy Cipla at this price, the purchase price, and I know that this is the level of support. So I look at the last dipping point in the chart, and I will place the stop loss a few rupees, 1 or 2 rupees below that point. Okay, just so, because it is if this is now this is a flexible or dynamic level of support now, because it bounced off of this level. So I will put it below that level. All right. Now, and the same thing applies if I short sell a stock. I will put the stop loss above the resistance level, and the same thing if you look at the chart. The level of resistance is here. I bought the share. I'm expecting it. I sold the share. I'm expecting it to go down, but I will put a stop loss above to buy it back to minimize my loss. You get this? So again, you can see that it's just a little above the last dynamic level of resistance. Okay. Now, a lot of people also ask me, what is a trailing stop loss? Okay, trailing stop loss is basically to book profit. Okay, and that's as simple as that. What happens is, if you're buying a share and as the price goes up and you're making a profit, and I want to book that profit, I don't want to immediately sell the share. But in case the market goes down, I don't want to lose out on a lot of my profit. So I will put a trailing stop loss. So for example, on this chart, imagine if I bought the share at this purchase price, and now the share has gone up, 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 and it's currently up here. So what I'm going to do is I'm going to put a trailing stop loss somewhere here. In case the share comes down, I will still get this much, a bit of profit. Now, if you look here, what happens? I can sell the share here at this point. I can sell the share here at this point. But look how the share goes. There are dips. Now, if any of these dips caught my trailing stop loss, I will still make a profit. But if it doesn't, it'll keep going up and I can still sell at a higher price. But what happens if it goes down? Now, suppose at this point you see there was a lot of selling pressure. If the stop loss is still active, it will take it off over here. And I won't suffer all the loss in the red section on the right side of this chart. Okay, do you understand that? That's what a trailing stop loss is. I use a lot of trailing stop losses to maintain my portfolio. Now, before we get into the assignment, I want to show you guys this in practical real life. Okay, how do we set a stop loss, right? How many of you want to know that? So we're going to see how we can do a practical stop loss, right? So let me just quickly take my just give me a moment, right? Yeah, I'm just looking at which share to probably just buy and show you this. So just give me a small, teeny tiny moment. All right, let's look at Cipla. Okay? So I have just bought Cipla. Now it is at, I bought it at 512. It's at 510. What I'm going to do, can you guys, I hope you can see this share. What I'm going to do is I'm going to put a stop loss. Now I click exit and it shows me this. There's market, there is limit, there's stop loss. This stop loss is what I'm going to put it at. So I'm going to put it at stop loss, and because I have to look at a bottom, I can check the chart, but because I know the chart already, I'm going to pick a bottom of 505. All right. So 505 is my bottom, and that will keep my stop loss. If I look at my orders, I now have a stop loss at 505. Now this share will keep going up. Most likely, this is one of the shares that I was tracking, as you can see from the the PowerPoint that we were doing today. But anyway, this is a share that I'm tracking, and see, I've already made about 650. If I sell it off now, I would make a good gain. But basically, the stop loss. Now, what happens? This looks like it's going to keep going. So I'm going to do a trailing stop loss. So what I'm going to do is I'm going to modify my my stop loss. So right now it's crossed 522. If I look at the chart, I'm pretty sure it's going to give, it won't go below 515. So I'm going to put a 515. I've just modified my stop loss from 505 to 515. And this is something that I'll keep following. Okay. So as this share goes up, I will keep increasing my trailing stop loss. If at any point it comes down, I will still make a small profit. All right. You see that? All right, that is good. So does that help you guys? Okay, any questions regarding this? Okay, so now what happened? The stop loss suddenly hit for some reason, and I sold off the share. Okay, so I don't know why that happened, but the volatility is a bit high today. And so what happened was that the stop loss triggered, and I sold it off. But because it bounced, it's just bouncing around. I'll probably take a look at this later. But because I did have a trailing stop loss, I ensured that I didn't lose out on it. I shouldn't have put it that high immediately because I didn't look at the chart directly. But this is just an example of how we can do this. Right? Yeah. So any questions from your side? Yes. So the question is, the trailing stop loss has to be done manually. It has to be inserted manually. But the what you can do is it will take, so if you create the manual stop loss, it will stay there. You don't have to then keep tracking it. It will automatically take it if the market goes below that price, right? All right. Yeah, so this is another stock that I'm looking at, possibly. Okay. Is there any other questions? Others, we're going to just look at the assignment for today. All right. So here's the assignment for today. What is now, as I said, the assignment is always to help you to get into the habit of research. What is a moving average and what is an EMA? Okay, what is the difference between a moving average and an exponential moving average? Second, what is an MACD chart? Okay, third one is, how do I know when to buy a share from looking at the MACD? And then how do I know what prices to buy and sell at looking at the EMA? These are very basic questions that if you can understand, you can do a lot of trading safely. You just have to look by the charts, see what are breaking out and buy accordingly, or see what's dipping down and sell accordingly. And it's pretty much a little more easier. And see, this is not gambling. When you are doing this, you're doing it on research, and then it reduces the risk a lot when you go with the charts. It reduces you just guessing or blindly buying or selling something. So the research that you do the previous day to check what can potentially go up, what can potentially go down, looking at the trends, looking at the volumes, all of this plays a part in deciding what to buy or sell. Okay, none of us actually make that decision simply because we like a share. I do sometimes, and I've regretted it, but normally none of us do that.